So if you're a global investor and you're starting to look beyond the US for that next big opportunity, there's a very familiar market that's going through a huge but quiet transformation. Today, we're going to break down why Japan, heading into 2026, is a structural story that I think most of the world is still seriously underestimating.
And you know what? Let's just start with the conclusion. By 2026, all the conditions are lining up for Japan's Nikkei index to find a stable new home above 50,000 yen. Now look, this isn't just some wild forecast. It's really the logical outcome of these deep, structural changes that are completely reshaping the country's economy and its strategic place in the world.
And here's the most important thing to get your head around. This is not the Japan of the last 30 years. We're moving away from this idea of Japan as just a cheap value market, a bit of a bargain bin, to a genuinely dynamic engine. We're witnessing a fundamental shift where Japan is becoming a core, strategic piece of the puzzle for global capital and for critical supply chains.
Honestly, if you ignore Japan right now, you might be missing one of the most significant structural realignments in the global markets for years to come. So, what's really driving this? What makes this time so different?
Well, it really boils down to three powerful and, I'd argue, irreversible forces all coming together at once. First, you've got geopolitics, where Japan is becoming an absolutely indispensable partner to the West. Second, money, because the country is finally ending its 30-year experiment with zero interest rates. And third, structure, as deep corporate reforms are at last forcing companies to actually care about shareholder value. We're going to break down each one.
Okay, let's start with that first force, geopolitics. The relationship between the United States and Japan is changing from something that was, mostly symbolic into something that is deeply operational and financial.
Japan is becoming what we can call a strategic node. What does that mean? It means it's now a critical, honestly irreplaceable part of the West's entire financial and industrial supply chain, especially as everyone tries to de-risk their heavy reliance on China.
And this isn't just talk and handshakes. We're talking about a massive, multi-year, $550 billion strategic investment cycle that's flowing from the U.S. directly into Japan's most critical industries. This isn't just random money sloshing around. This capital has a very clear, strategic job to do.
So where is that money going? It's being channeled right into the backbone of any modern economy. We're talking semiconductors, the infrastructure needed for AI, next-generation energy systems, think LNG and advanced nuclear, and of course, beefing up defense production.
This right here shows you exactly why Japan is so critical. It literally controls choke points in the global tech supply chain. Japan produces 90% of the world's silicon wafers and 90% of the photoresist that you need for advanced chips. It's simple. You cannot build a modern, secure semiconductor supply chain without Japan. Period.
And that really brings us to the core takeaway on the geopolitical front. Investment capital isn't flooding into Japan because it's a bargain anymore. It's flowing in because, in this new world we're building, Japan is strategically necessary.
All right, let's shift gears to the second major force, the changing flow of money inside Japan itself. After decades, literally decades, of zero interest rates, the country is stepping into a completely new monetary world.
To really put this into perspective, by 2026, Japan's policy rate is expected to hit 1%. The last time rates were even in this ballpark was 1995. Think about that. For an entire generation of businesses and investors, this is completely new territory. It fundamentally changes everything about how capital costs and where it goes.
So what does this actually do? Well, that old era of zero rates, it basically kept inefficient zombie companies on life support, made banks weak, and encouraged capital to just sit there passively. Normalization flips the script on all of that. It forces companies to be disciplined with their money, and when you combine that with new corporate governance rules, it finally gives shareholders the power to demand better returns. It's like a system-wide cleansing.
And you know what? We're actually seeing proof of this shift in the real economy. Sustained wage growth, which is something Japan hasn't seen for decades, is now consistently clearing that 4.5% mark. This is the confirmation that the domestic economy is finally starting to generate its own momentum.
So given these incredibly powerful geopolitical and monetary shifts, how should investors be thinking about the opportunities? Where does the smart capital go to position itself for this new reality?
Now, this isn't about short-term stock tips. It's about identifying the multi-year themes that are going to benefit from these huge forces. The real opportunities are in things like AI and semiconductor infrastructure, defense industries that are aligned with these new geopolitical realities, and of course financials, like banks, which are a prime beneficiary of rising interest rates.
It's also about finding those companies that are finally getting the message on shareholder returns, doing buybacks and raising dividends.
So the big point here is that the real opportunity isn't about trying to trade the daily news cycle. It's about positioning your portfolio for a fundamental, multi-year re-rating of the entire Japanese market, as its role in the world is completely redefined.
Of course, no big structural shift comes without risk. To be credible, we have to acknowledge the things that could complicate this whole story.
There are three things to keep on the radar. First, currency volatility. That's always a factor with Japan. Second, political uncertainty coming out of the U.S., especially around the topic of tariffs. And third, any potential for more trade friction related to China. Now, while these risks are absolutely real, they look like manageable factors inside this larger structural story, not fatal flaws that derail the whole thing.
All right, let's bring this all home. What's the core message, the one big idea to take away from all this?
It's this: Japan is transforming from a market that global investors have pretty much forgotten about for a generation into a truly strategic engine for global growth and security. Its importance is no longer just about economics, it's geopolitical.
And this is absolutely key. The opportunity here is not some explosive, speculative bubble that's waiting to pop. It's a structural, persistent shift, like a set of massive gears slowly turning into place that is probably going to unfold over several years. It's a marathon, not a sprint. And that leaves us with a final question for every investor to think about. In this new world of fragmenting supply chains and shifting alliances, is your portfolio positioned for the world that is now forming, or is it still anchored to the world that is very quickly fading away? Hey, if you appreciate this kind of calm, structural look at the markets, go ahead and subscribe for more insights into the global shifts that are really going to matter.